what's up, everyone? Swinging Bull here with PV Alerts back again for an earnings stream. Today we got two good ones here. Salesforce, just ticker symbol CRM. And then we got C3 AI, ticker symbol AI. So I believe Salesforce is going to report first. To my understanding, CRM reports at 4 p.m. Eastern, so it should be any moment now we'll get that reaction. And then AI, which is C3 AI, I'm showing at 4:10 p.m. Eastern. So let's see what's going on here. I got TradingView pulled up. Welcome to the stream, everyone. People just piling into the stream right now. I got almost 100 people already. It's only been a minute. Got a nice group of people in the Discord as well. Johnny Cash, my buddy Rudel Trade, Rose in the house, Moon Man. Just giving some shout outs here. Kyle on X, how is prop bullish? We'll take a look here in a minute. Look at CRM. CRM's getting a reaction. It's negative. Let's see if this ends up being the right move. Wick down to like 255. It's just not far below from where it closed the regular session at. Okay, Kyle, I got you. Absolutely. We'll take a look at prop for sure, I promise. Just want to zoom out on CRM just for a sec. 15-minute chart. Okay. All right, so it's already below yesterday's low. Just right around 249, right below 249. Negative reaction on Salesforce. Let me see what kind of info I can get. Let's take a look. CRM. Yeah, so their data's out already, so okay. It's looking like they might have messed with their guidance a little bit in a negative way, because they did beat EPS and revenue, and the year-over-year and quarter-over-quarter numbers are green. Here's a little graphic here. So the forecast EPS for Salesforce was 2.78. They just reported 2.91. And the forecast revenue, 10.14 billion. They just reported 10.23 billion. So double beat. But again, it's not going to hold a lot of weight if they messed with the guidance in a negative way. Year-over-year numbers, quarter-over-quarter numbers for EPS and revenue, also green. So let me see if I can find some commentary or some guidance and see what's going on here. I read something earlier. Was a CRM insider sold almost $2 million worth of shares yesterday? Interesting, huh? And now they got a negative reaction here. Super Leafy Man on YouTube. Let's give it a second. Yeah, we'll take a look at GitLab as well. I'm looking at C3 AI. It's supposed to report in about 7 minutes. Salesforce is already out. AI hasn't reported yet. So you're saying you got $17 calls? You're thinking they're cooked? We haven't got a reaction yet, so it hasn't happened. Let me see if I can find out the guidance for CRM, because there's something negative here. I'm not seeing it yet. So they beat EPS and revenue forecasts, and the year-over-year, quarter-over-quarter numbers were fine. Maybe investors wanted to see more growth there or something, but let me post at least the revenue and EPS data on the bottom of my screen. Yeah, let's see. Super Leafy Man. Yeah, absolutely. They haven't reported yet. What we were looking at was Salesforce. So C3 AI is still it hasn't happened yet. All right. So let's wait a few more minutes. All right, look at CRM. It wicked down to 244, and it's on its way back up pretty good. I mean, this is a 15-minute chart. I'll go 1 minute. Yeah, look at that. There's some dip buyers there on Salesforce. I want to know what caused that selling. Okay, here's some more info here. Let's take a look. Okay. Q3 adjusted EPS outlook. I want to see the guidance. I want to see what the estimates for the guidance were, because I mean I have what the guidance they put out. The Q3 revenue outlook 10.24 billion to 10.29 billion. Okay, that's fine. Q3 EPS outlook $1.60 to $1.62. I'm thinking that that's the guidance they put out. I'm thinking the estimates were probably higher than that, which means they reduced the guidance some. As soon as I find out, I'll let everyone know. I want to see if I can get any commentary from the CEO or the CFO. Sometimes that'll hint about what's going on. And then, of course, we got the earnings web call. I'll show everyone how to get there. Revenue actually, okay. Yeah, I mean, they actually increased the Q3 guidance. I'm looking at it right here. Staples on YouTube, yeah. Salesforce is going to do an earnings web call. It usually doesn't start. It's usually about 30 minutes to an hour after they report the data. So what we're looking at now is basically just the stock price reaction to the earnings data that was just released. The earnings web call usually follows in about 30 minutes to an hour after that. I actually let me just find out real quick when it is, because I know a lot of people want to see it. Look, it's kind of making one of those bearish H patterns right now. Let's see if it comes down. It's like a lowercase h. We trade them a lot. All right, let me go to the investor relations page and find out when is CRM's earnings web call. Okay, let's go here and take a look. C3 AI still got about 3 more minutes, and then their data is going to come out. I'm rooting for you, my buddy on YouTube, Super Leafy Man. I'm rooting for you. I know you got those $17 calls. It's showing a little bit of pre-earnings momentum. It's at 16.85. If they get a positive reaction, I would think those 17 calls would go in the money and you get paid pretty good on those, I would think. Okay, just real quick, while we just got a few more minutes before C3 AI reports. Salesforce, ticker symbol CRM's over here on the left. It just made that lowercase bearish H pattern that we see a lot. Let's see, going to double bounce here. It's going to go for another leg down. This is an important level. But all right, upcoming events. Okay, let's see right here. Okay, this is the earnings conference call, September 3rd, which is today. We click on this webcast link and get a time for everybody. Okay, it's at 2 p.m. Pacific time. So Salesforce earnings web call is going to be at 5 p.m. Eastern. Okay, so we got a bit of time before that happens. So we'll kind of see what the price does leading up to that earnings web call. And then maybe there's a secondary move when they do the earnings web call, when the CEO and CFO start talking about the future and stuff like that. But it just made a new after hours low. Not good for the CRM bulls here. It looked like there were some dip buyers. It retraced pretty far back up. I mean, we could probably measure this out real quick. Let me see. Okay, let's see. So yeah, I mean, it retraced about like 78% of that initial move, and then the sellers just came back into the picture with a little bit of a vengeance here, and now it's making it just made a new after hours low. So I have to delete these fib lines for now. I like to draw those on once we see a bounce. Once the selling slows down, looks like it might be curling up or something like that. I'll go ahead and draw the fib on. It's just nice to have some easy mathematical levels right there, easy to put on the chart. Most charting platforms will have the Fibonacci or the fib, whatever you want to call it. Just good levels to look at from a quick bird's eye view, and my math people out there know what I'm talking about. C3 AI is 4:09 p.m. They're supposed to report at 4:10. It's got about 15 seconds. Let's see if it goes right on to the dot, to the second. About 10 more seconds here. So Salesforce. Okay, fiscal 2026 guidance. Let me see, operating cash flow. Okay. There's some commentary from the Salesforce CEO and CFO. So the CEO is Mark Benioff. He says, we delivered an outstanding quarter, remain on track for fiscal 2026 to be a record year with nearly 15 billion operating cash flow. All right, that's all fine and dandy, but investors aren't, the price action isn't really reflecting that being positive. But the CFO, we exceeded all our financial targets while achieving our 10th consecutive quarter of operating margin expansion. That's good. There's something about that earnings investors aren't liking. I'll dig a little more into it, but let's switch over to, let me post the EPS revenue for Salesforce real quick, since we just went over that a little bit. So actually, I'm going to post a better one. So it was a double beat. And also just a little side note, Salesforce did add $20 billion to their buyback program. So now they have a total of 50 billion authorized for their buyback, their stock repurchase program. All right. Give me 1 second here. I got too much on my screen. All right, I'm going to post something different on the bottom of my screen for Salesforce. This looks a lot better. There it is. Okay, there we go. So that's a lot cleaner. So, double beat on Salesforce, but they're not catching a bid. I mean, there's some dip buyers there, but it's sitting red and after hours. Now, it closed the regular session at $256.45 a share. It was up 1.4% on the day. Now it's sitting in here in after hours, trading at $247, down a little over $9 a share, which equates to about 3.6% in the red here in after hours. So we'll see, but so far this looks like a downtrend. It's just made lower lows, and it's looking like it might make a lower high here, which is just a clear downtrend for you technical analysis people out there. But let's see if it can eventually find a bottom. Then I'll draw some levels on there and we'll take a look. Matter of fact, let me look at, so it's trading at 246.50 right now. Look at the daily chart real quick. 246.50. Yeah, I mean, you can see TradingView puts the extended hours price force right there, that blue line. So you can see it bouncing around. I mean, suppose there was some demand around 245-ish, around the bottom of this candle. So kind of printed some dojis and traded sideways for a little bit back here. This was last month though, but could be a level of interest. You see some bottom wicks here on these candles, but say 245 probably be my support level number one on Salesforce. And if it can't hold that, I mean, we do got another level here around 240. Could be something there. But let's be real. And I'm going to go to C3 AI right now because I see it selling off on the right side of my screen. It's like sticking out like a sore thumb. But I just wanted to see what the health of the condition, or the health of the company was going into this earnings. And this is for CRM, Salesforce. Let's take a quick peek over here at some of the income statement and the balance sheet and stuff like that. But PE ratio looks nice and healthy. I mean, trailing 12 month was sitting at 40. PE ratio, this is a software company. PE ratios are typically high for a software company. And to be honest with you, some of the other software companies have a much higher PE than 40. So this could be considered undervalued according to the PE ratio and comparing that with the PE ratio of their peers and competitors. But EPS is 6.4. They do pay us tiny dividend. I guess it's better than nothing, 0.6%, 931 million float. Okay, still on CRM here. I just want to take a peek at the income statement. So yeah, obviously a profitable company. 5 quarters in a row, they've pulled a positive net income. Year over year numbers are nice and green. On the annual basis, they had a little bit of a rough patch in 2023. Nonetheless, it was still a profitable year. Looks like they made about $200 million in positive net income in 2023, which is a far cry from what they're used to pulling in. I mean, 2021, they pulled in $4 billion positive net. 2022 came down a little bit, $1.4 billion. But it looks like they usually roll, $4 billion to $6 billion. That's kind of, what they usually do. Look at 2025 up to 6.2 billion already. I mean, it's a good company. It would be something I would have in maybe a longer term holding. Maybe get to the point, and you have the capital, accumulate, up to 100 shares, and then you can start collecting income, selling some covered calls, and you could probably chip away pretty well at your cost basis. Let me see what these covered calls. I mean, I'll just go to the next monthly cycle. I mean, it's September 19th would be the next monthly cycle. That's only 16 days away. And yeah, sure enough, look at this. I mean, you could probably go to a 10 delta on these covered calls, and they're paying $200, $300 a pop. And you could be bringing, and that's only 16-day to expiration. So you got to figure on the monthly time frame, or you do 2 biweeklies to, so on a monthly time frame, you'd be pulling in $500, $600 a month in extra income. And that's at a 10 delta. I mean, of course, you could be a little more aggressive. The higher the delta, the more chance your shares will probably get called away. That's why 10 delta is probably a little safe if you want to hang on to the shares. Doesn't eliminate the possibility of your shares getting called away. It just, the lower the delta, in theory, that's more of a chance of the trade working out and your shares not get called away. So you could also look at it as a 10 delta would be maybe a 10% chance that strike goes in the money. That's another way of looking at it, but it's all the same. And yeah, even if you don't own shares, okay, if you don't own shares, and this stays down here going into tomorrow, like I said, it was damn near about to break into the 260s towards the end of the day today. So we'll see if it stays down here. But this, I could totally see this as being looked at as a discount, okay? Because I like the company. Their fundamentals are pretty solid. Their financials are solid. We just took a quick peek. Oh yeah, I forgot to check and see what their how much cash they had on hand. Only 38% debt to asset. Amazing, amazing. Let me just get the line items here. Yeah, cash and equivalent, 17.4 billion. That's as of April 30th. So that I have to check into the earnings that were just released and see what their cash and equivalents are. I'll go through that later, but going in as of April 30th, they were sitting on a ton of cash. So I love the company. And Taco Friday on YouTube, you make a pretty good point. I have to say, made me think of something. If you don't already have shares of CRM, and not financial advice, this is just what I would do personally. If I was interested in becoming an investor of Salesforce and I didn't already own shares, absolutely, I'd probably start selling cash secured puts. Now, you need a little bit of capital to do that, but if you have the capital, that's the way to go. And you could maybe just tie up a bit of capital and see how many rounds of cash secured puts you can get in before you're even assigned one single share. And you'd be surprised. You can build up like $1,000 in credit, and of course, $1,000 in credit would basically reduce your cost basis by a ton of money, like $10 a share. So if you built up like $1,000 in credit, and let's say you eventually get assigned, maybe one round of cash secured puts, you played a little bit of aggressive because, you kind of do want to get assigned, all the credit you were collecting on as many rounds as cash secured puts that you were able to get in before assignment, keep a spreadsheet on the side, keep track of all that premium. And then when you do get assigned, you'll be able to deduct that from your assignment strike, and now you'll have a true technical cost basis. And it's a beautiful thing. I love selling cash secured puts. But all right, back to the sticks real quick. Salesforce still kind of hanging out down here in the 240s. This is 5-minute chart. Let me go back to TradingView. And we're going to go over AI here in just a moment because they obviously got a negative reaction. We're going to find out what's up with that. Let me just look at something else just real quick. before we move on. Additional metrics. I just want to make sure I'm not missing anything on there. Salesforce. All right, since I'm going to go back to TradingView and put a fib on this because, I mean, it did print a 5-minute green candle. It's working on a 5-minute green candle now. So there's obviously buyers in the picture. It may be trying to bottom out. 5-minute chart RSI is back above 30, so that's promising for the bulls, mainly for people who were long on this going into the earnings. You know, you want to see this recover. For people that don't have shares of CRM and maybe they were waiting on a pullback to try and get a discount on the stock, this could be it. If it kind of hangs out here in the 240s going into tomorrow, like I said, if you got the capital, maybe sell some cash secured puts, or, you know, for smaller accounts, maybe just start accumulating shares and, you know, go and take that route. But let me see what this retrace looks like. Okay. All right. So, you know, if I'm going off the bottom of this wick here, it's kind of hanging out right at the 25% retrace. You can see right here. It's going to be about 246 a share. So that's important. You know, this thing's got to reclaim at least 25% for me to even have any kind of confidence that this is going to reclaim some of the selling that just happened. Let me look at something else just real quick now that we got some levels on the chart. So if it can hold 246, that would be ideal. That's, you know, it's above there right now. So just kind of a real tight S1. Of course, support 2 is the after hours low. There's not really much to think about there. Resistance levels, I got 248 on my radar. And then I'll probably put the golden fib level there as my resistance to right below 252 a share. So resistance levels 248 and then right below 252. I'd love to see those levels get reclaimed. And then the bulls that were long on this going into the earnings, you could probably, you know, take a breather, get some fresh air. It's going to be okay. And like I was saying before, we just took a quick peek at their income statement, balance sheet, looked at some PE ratios, looked at some EPS numbers. I mean, overall, I like the company. I in my opinion, this definitely can be looked at as a discount on the stock, in my opinion. Okay. Let me just make sure I didn't miss any. Okay, for C3, thanks Taco on YouTube. Appreciate the input there. So for C3 AI, looks like the news broke about the CEO is having health issues, and that's not really something investors want to hear. I appreciate you pointing that out, Taco. You know, investors want the captain of the ship to be healthy and strong, you know, and health issues affects the stock price, you know, it definitely does. Let's take a look at C3 AI's data because, oh, wow, Ned on YouTube owns C3 at $16.50. Okay. Well, listen, it's not all doom and gloom. All right. Let me look at the daily chart on this thing. And I just want to give myself a reminder to absolutely not forget about, oh, I'm scrolling up in the comments here. Kyle on X. I didn't forget about you, brother. We're going to look at prop here in a minute. But let's look at C3 AI. It's trading at $14.40 right now in after hours. It's been down this level before. Back here, this was January in 2023. It's what, like 2.5 years ago? It was down there. Yeah, I mean, I know you don't, you know, you probably, the bulls didn't want to see the $16 level get broken. It's like 16 and some change. Kind of where it closed the regular session at, to be honest with you. Lines up with this support back here from April of 2023. This is the daily chart. Just look what the weekly looks like just real quick. Look at the weekly chart. Jeez. kind of fell off a cliff there. But it's in the grand scheme of things, it is trading sideways between. I mean, going into the earnings, it was trading between like 18 and 40, around there. Lots of peaks and valleys, but there's a big gap on the top side now too. That happened a few days ago. I have done. Actually, no, this is the weekly chart. This happened a few weeks ago, like a month ago, about 3 weeks ago. Had that gap there on the weekly. Wow, that's a big one. All right, let me go back here, and then yeah. So I know you don't want to see it down here at 14. This was a level of interest in 2023. I know that's a long time ago. It's like around $13, $12, $13. Trading just above there now. I definitely don't want to see it go below there. I mean, my risk on this would be right below here, and that's no man's land because it's never been that low before. Let's take a quick peek at the options, the option chain on this thing, because there's all kinds of creative things you can be doing on this, depending on how many shares you own and things of that nature. So if you do have, if you're a firm believer in C3 AI, matter of fact, let me get the earnings results because I haven't even looked at them yet. I just know they've got a negative reaction, down 13%. Yeah, C3 AI looks kind of bad. I'm not gonna lie. Hopefully, I'm not pissing off any C3 AI bulls, but kind of red across the board on this thing. Forecast EPS was negative 0.21, and they just reported negative 0.37 and missed that by quite a bit. Forecasted or expected revenue was 93 million. They just reported 70 million. They missed a bit on there too. Year over year numbers, quarter over quarter numbers for EPS revenue, red across the board. So yeah, that's not what investors want to see. But let's just take a look. EPS trailing 12 month is pretty negative. I mean, I guess what they got going good for them is they're in a solid industry, right? Software, IT services, of course, AI. So, I mean, I guess there's a silver lining there. Yeah, damn, I was hoping I didn't. To be honest with you, I've never traded a C3 AI before. Okay, so Ned, on August 8th, they lowered. Okay, so that's what happened with the gap down probably then, because that was right around when that gap down happened. They put out some news about the guidance, and now they've missed the new guidance. Yeah, I mean, Ned, you're spot on with that. It's like a back-to-back gut punch for them. They're like, oh shit, all right, we got to let everyone know that, or they kind of tried to front run it, right? They're like, all right, we know we're going to have to lower the guidance, but let's put out a news report before the earnings and just kind of warn people so it's not so much of a surprise. That I think they were hoping that would help their situation. It looks like it just turned into a double bad thing where they got hit with the early news, and then they couldn't even meet the new guidance going into this earnings. So yeah, that's going to hurt them. That's. And I'm sorry, to the C3 AI bulls out there. I don't think it's over. I mean, they do have very, very low debt. That's something going good for them. Their debt to assets only 18%. That's super low. So I wonder if they have a big runway. Let's see how much cash they got. Yeah, I mean, as of April 30th, they had like $750 million in cash and equivalents. So that's a pretty good runway. But how much are they burning? Yeah, I mean, it looks like they got a pretty good runway because, leading up to the earnings, it's been fairly consistent how much money they've been losing every quarter as far as negative net income goes. It ranges from like 60 million to 80 million. So, if they have close to $1 billion in cash and equivalents, Do the math. That'll tell you how many quarters of runway they got left before they should start really worrying. But it looks like they got plenty of cash and low debt. So, and they got a bit of a runway. So, I mean, this very well could go back the other way. And as far as the option chain look like, I mean, you might want to think about starting to deploy some covered calls to get your cost basis down. That's just something you could start doing right away. I know hindsight is everything, and probably obviously would have been better to maybe deploy those before today. But I mean, let's see, it's trading around 14.50 right now. Kind of trading in the mid 16, so it's down $2 a share, around there. And I mean, even you can see these strikes here on this October expiration. These are $2.50 wide strikes, so you got to figure if it stays down here around 14.50, then I'm thinking tomorrow, if your average was around 16.50, you could probably pick up 60 to $100. It just depends where it lands tomorrow morning. But even $2.50 out of the money going into the close today, you can pick up over $60 a contract on those bad boys. So, and you got to think what I'm trying to explain here, and maybe you already know this. That was for the person who said they had the average at 16.50, but listen, I'm just trying to help in what you could have done maybe moving forward. So if you're at 16.50 average going into the earnings, and you did not want, and let's say you wanted to cap your downside risk. Let me show you this. This is what I'll do. I'm going to show you how you could have cut your downside risk if you were worried that they were going to get a negative reaction. You could have sold the 17.50, and actually you didn't even have to put that much time on it. You could probably have just done you could probably just done this Friday's expiration, because what you could have done is put a collar on this. You could have sold this $17 covered call for $85. That was the last sale. And then you could have used that $85 in credit, and then you could have purchased this naked put 16.50 strike for right around the credit you received for the covered call. So that would have been a risk-free, basically a hedge that wouldn't cost you anything. And then you wouldn't have participated in any of the downside below 16.50. And then what you do is before Friday's expiration, you would basically cash in this 16.50 naked put for profit, and then liquidate your shares and then move on to the next trade, or reposition that capital or something. Overall, my honest opinion, I'm not going to sugarcoat it. I don't really like C3 AI. I don't like their fundamentals. It's not something that I personally would trade long term. Maybe in and out like a ninja, like quick cash grabs every now and then, I would maybe consider, just because they do have the AI hype going for them. Maybe it's kind of props them up sometimes, and then when AI stock or semiconductor stocks start running, this is a software company, not so much hardware, but still, when the AI sector kind of runs in general, maybe it gets a little boost. So I would kind of trade it like that. I don't know if it would be something that I would, put a lot of capital into. But that's also not to say that if you are in that position, I want to let you know that there is light at the end of the tunnel, and you need to start deploying some covered calls, because what you're going to do, if your cost basis is at 16.50, you could have been deploying these even well before the earnings, and getting $60 a pop, even if you're $2.50 out the money. Every time you do a round of covered calls, you're going to reduce your cost basis by 0.60. Even just one round of covered calls, you'd be into the $15 range from a 650 average. And there's ways that you can play defense and help your cost basis out, to help give you some cushion in case there is some drawdown and the stock takes a downtrend move or whatever. So I'm always here for everyone to try and get creative on how we can prevent ourselves from finding ourselves in these types of situations moving forward. So I'm always available for If anyone wants to bounce anything off me, like what would I do to protect myself in this situation? And I'll give you my honest opinion. But wow, yeah, look at that. It's already after 4:30. Both stocks have a negative reaction. Both stocks are software companies. And they just kind of look similar right now. So again, it looks like there might be a bottom though. The bottom might be in on both of these. You know, you got to keep your eye on it, draw a fib on it. CRM is above the 25% retrace now, so I would like for that to stay above there. That's right around 246 a share. Like that to hold for CRM. For AI, C3 AI, these are just quick levels too. You know, I'm looking at about 14.50 for S1. I'd love for it to stay above there, and then if it starts making higher lows, you can start breathing a little easier for the bulls on these stocks. As far as the company that you know, not financial advice, but out of these two companies, which one I would go after as an investment, it would be Salesforce, of course. I mean, we just looked at the income statements and the balance sheets for both companies, and there is a night and day difference here. And then also we talked about how you could, you know, help hedge yourself a little bit going into these earnings. It's a simple collar trade. Sell a covered call and use that money to finance a naked put, and you're fully protected through intrinsic value alone, just through the strike price of the naked put. So, of course, you're only protected up until the expiration, but you got to make a decision at expiration. You could just put another collar on if you wanted to, or if you're sick of looking at the position for whatever reason, and or maybe you were green already, then when you get to the expiration date of your collar, just liquidate the whole position and you'll be just fine. You know, you got to start protecting yourselves going into these earnings catalysts. You start protecting your hard-earned money. Not saying anyone's not, but I know there's some people out there not doing it, and they're just sitting on the sidelines hoping and praying, when you could actually be implementing some really good risk management techniques, you know, and just protect yourself. That's all. All right, so I gotta take care of my buddy Kyle on X. He wants to see. I think you were the one that asked about prop, right? Let me go back to the top of the comments. So we'll look at that real quick. Yeah, prop. Yeah, we're gonna look at prop right now. So we're just waiting for CRM and C3 AI to start making higher lows, and they're still kind of struggling down here at the bottom. So I'm not quite confident that they're going to retrace or not, but we'll see. Let's take a quick peek at prop. Now, after I look at the fundamentals and financials, you might not like what I got to say, but I'm not going to blow smoke either, you know, and sugarcoat things. I'm going to give you my honest opinion, and you might, you know, Kyle on X, you might not like me after I'm done talking about it, but I want to tell you what I feel, man. I've been trading about 10 years now. Been writing. I'm mainly a contract writer, kind of like a little mini market maker. Just about all my trades are sell to open. And I've been doing that for over 5 years now, I think. And but yeah, I'll give you my honest opinion, man. So don't hate me if I don't like it. But so obviously it's a penny stock. Technically, anything trading under $5 is considered a penny stock by institutions. Okay. All right. So that's one thing, which is not bad. You know, this could be a speculative play for you, and there's nothing wrong with that. You know, there's some stocks that are trading under $5 that I personally like, that I think have potential in the future, and they're my more speculative plays. PE ratio is positive. The forecast is 2.52. That's a high PE ratio for a stock trading in the $2. There's probably something more to that. I'll have to look more into that. EPS negative. Free float 25 million, so it doesn't take much to move this. Let's see if they've done any reverse splits. Yeah, well, it's been a while, but they did do a reverse split in 2023. So got some share dilution going on there. I'm trying to raise money to keep them out of trouble. Let me reset this. I know they got a big following, like on social media and stuff like that, which, I mean, I'm not saying that's a good thing or a bad thing, but yeah, they've been downtrending for a while now, haven't they? Let's say the overall most recent downtrend, they've been downtrending for about the past year. If you just pull up that weekly chart there, that's a tough one. That is a tough one. Let me look at daily chart. I mean, if I did not have a position on this, and I was like, all right, maybe I'm going to take a nibble, right? Just for speculative trading purposes. Obviously, light position size on anything speculative, but I have to be honest. My risk on it would be right below $2. I don't like it below $2, and that's if I did not currently have a position. So this would be something where, you know, if the $2 level holds, maybe we get a nice spike like it did back here, moved about 75 cents a share over the course of about 2 trading weeks, be like some sort of short term swing, you know, kind of like a cash grab type deal on technical analysis alone. Because that, yeah, I mean, that would have been kind of a double bottom play right there, to be honest with you. I kind of had some demand here on June 30th. This thing went from like $3 a share all the way to 430s, pulled back, did have a short-term double bottom bounce here that lasted for about a week and a half, 2 weeks. And that's a 75 cent per share profit banger right there. That could have been a short-term swing. Obviously moved stops up along the way. Yeah, and another little short-term bounce it had was at $2. I mean, you can see this bottom wick here came down to 2.01. There was dip buyers there, and it ran up to $2.72, right around there. That was like a 70-cent rally there. That only 1 week of price action, 5 trading days, it rallied 72 cents. So, you know, I mean, let me look at the financials. Okay, all right. Hey, Kyle. Hey, listen. I changed some of what I'm saying here. They pulled a profit in Q2. Look at that. They finally dug themselves out of the hole. All right. Hey, you know, because 4 quarters prior to that, they were losing money. All right. About 8 million to 11 million a quarter was negative. And then the last quarter, they Q2, they pulled a profit. That's amazing. This could be a comeback story, right? Tiago Nia says it doesn't mean if you beat earnings, but how many times you say AI in the call? Yeah, I mean, you know, that's funny you say that, because the more times they say AI, that's when those secondary moves happen. You know, it's kind of like the magic word, you know. The more times you say it, and then all of a sudden you got dip buyers and investors more interested, and they start taking a position or adding to their position. But Kyle, back to prop, man, I got to take back a little bit of what I was saying. I mean, technical analysis wise, they've just been in a hell of a rut. I mean, it's probably, you can see it a little clearly on the weekly chart. But the last time there was a double bottom potential setup, there was a nice rally. I'm thinking they could probably do that again at the $2 level. So I'd have my eye on a double bottom bounce around $2, but I'd have a tight risk, because if it doesn't double bottom bounce there, it's going to have another leg down. And I mean, if this thing starts getting in, you know, if this thing gets into the $1 range, which obviously breaks below 2, it'll be in the $1 range, getting a little close to you know, what's next after that? They get below $1, and now they have compliance issues with the exchanges, and you don't want to be in that situation, because that's when the reverse splits start happening again. And they did do one in 2023. But technical analysis wise, I'd be looking at a double bottom bounce potential play at the $2 range with a tight stop loss below $2. You know, give it a little bit of room. because these double bottom bounces seem to yield some good returns in about a week or two based on previous price action. But also on top of that, so they just had earnings last month. Okay, so their earnings is out of the way. Obviously, they sold off for earnings, but look for double bottom bounce around 2. That's how I would play it. Obviously, their investors didn't react well to their last earnings, so I don't think they improved as much as investors were wanting to see. If it was me, I'd be playing a double bottom bounce around 2. They do have an options chain, but it looks pretty ugly. There's nothing going on. They don't even have out of the money puts on this thing, which is, it's trading at around $2. That's probably why. But that's all I got on prop. I mean, I'd really want $2 to hold, Kyle. And okay, that's good. And I didn't have a chance to dive into the news on it, but if insiders are buying, Kyle, that's a good sign. One of the other coaches in our Discord, he loves looking at that stuff. When insiders are buying, it's definitely a positive thing. And like I said, they did pull a profit in Q2. I'd have to dig a little bit more into the earnings to see. I mean, they had 68 million in revenue. The last earnings, let me go total revenue. So total revenue is 68 million, and their profit was 35 million. So I don't think it's over with for this company. They showed signs of life in Q2. And Kyle, couple that with the insiders buying. I really do like it. Just for me personally, I don't really like it below $2, man. So that's just my opinion. But I hope that helped a little bit, maybe clarified something you were already thinking or something. But there are some positives there. More specifically, they pulled the profit in Q2. And they just, they need to keep marching forward. And then also, did we see how much money they got? Okay, they got 10 million in cash and equivalents. But now that they're pulling a positive net income, they shouldn't really be burning much cash either, right? So just keep a close eye on it, man. Like I say, I don't like it below $2. But yeah, it's been about 45 minutes. Let me make sure I didn't miss anything else. All right, satisfying cuts on YouTube. You bought a put up 226% in buffer. Taco says stay away from C3. Let me see what it ended up doing. We switched over to prop there for a second. I mean, it looks like it's trying to form a bottom. This is the 15-minute chart. It's printed kind of a doji-looking 15-minute green candle. The subsequent candle was a nice 15-minute. I had a body on it, so that's good. Don't really want to see dojis get printed because that means it's the buyers they just don't have enough force or momentum. I'd like to see some bodies on these candles, but it is looking like a possible bottoms in on C3 AI, and that'd be right around the $14 level. Satisfying cuts. I do not own either one of these. I don't own C3 AI or CRM, so this is strictly unbiased what I'm seeing here. I do think Salesforce could be a great dip buy. They got solid fundamentals, solid financials. I mean, there's a reason why they're trading in the 200s, right? I also do not have any option. I don't own any option contracts on either one of these either. I did. Let me see. Let me look at some other things. I want to show everyone a trade I opened up that's actually performing pretty well. I opened up a bullish spread on PayPal yesterday, as a matter of fact, and it's performing quite well. I'll go over that real quick before I end the stream because I know a lot of people wait to the end of these streams to kind of see what I got cooking because I like to share some of the things I'm trading at the end. What trading platform is that? Satisfying Cuts. This is TradingView. I love me some TradingView. And also do use Webull. This is the desktop application for Webull, which is a lot better than the web-based version, I think. And then I'm a big fan of Thinkorswim. But let me just go over this trade I opened up yesterday, kind of give you all an idea of the types of trades I do around here. Let me actually just move my screen over. So this is a put credit spread I did on. Actually, this one's on SPY. I opened this up the other day too. It's already profitable too. Let me go to the PayPal one though. Where is that? Okay, it's right here. Because this is the one I wanted to show. So PayPal. All right. Let me just go on a bigger time frame chart so y'all can see better. I'll just flip this to one chart. Yeah, it's already on PayPal. So what I'm looking at on PayPal, okay, is it's got the earnings selling kind of out of the way. It did have a negative reaction to earnings. It gapped down, kind of. I mean, Trading View says it's, I don't know, like a $6 gap, something like that. But now that the earnings selling, I was patient with it, okay, because I saw the reaction for earnings. I was like, all right, I'm not, because PayPal's not going anywhere. There's tons of people that use them. I personally use them every day at one of my businesses over here in Florida, on the business side. But so the selling for the earnings is out of the way. You could probably draw a regression trend on this bad boy. Let me show you what it would look like. And here, you just put it to where it kind of bottomed out for the earnings selling. And let's just let Trading View kind of draw it for you. So this is what I'm trading. It's after the earnings selling, the sell-off ended. You could clearly see that the bottom came in, kind of double bottom bounced right here too. Kind of a triple bottom actually right here. But started trading in this ascending channel. We got multiple touch points on the top of the channel and bottom. And this is why I opened up the bullish spread on it, because I think the selling is over with. And investors were kind of saying, hey, PayPal down here in the 60s, that's a good price for that right now. So it's slowly trending up, and that's what's going on with the spread trade. And the potential return is about 24% return on the capital that I'm using. Taco Friday, thanks for the heads up. Just a reminder for everyone, CRM earnings call is in 10 minutes. And did I already post the link for that? Let me give everyone the link for that. All right, and you can easily get to the earnings web call. Thanks for the reminder, Taco. Okay, I'm going to put it on the bottom of my screen. You can screenshot that if you want. That'll take you to the earnings web call with CRM Salesforce. I know that's why most of the people are here on the stream. I'm sure there's a good chunk of people here for C3 AI as well, but let's just be real. CRM is the better stock of the two fundamentally. So most of the investors are probably here for that. But as soon as you get to that Salesforce link, I just posted on the bottom of my screen. Just scroll down to upcoming events, and you'll see the webcast link right there. And then you'd be good to go. But this PayPal spread, I really like the setup. I really like the setup on the chart with this ascending channel after it's the selling from the earnings got out the way. So this is the spread I did, and the expiration date was September 19th. So only got to hold it for 16. I don't even have to hold it the whole time if I don't want to, but there's 16 days till expiration. My break even at expiration is $66.76 a share. So that's really all I care about, is PayPal staying above 66.76. That's kind of the thesis behind the trade. For those that trade spreads, you know what I'm talking about. So I always like to put my break-even line on my chart, and then I'll put a horizontal break-even line there. So now I know I can just pull up PayPal really quickly, and as long as it's trading above my white line, I'm going to stay in the trade, no problem. Another thing I like to do is put a vertical line for my expiration date. And we already know it's September 19th, Friday, September 19th. So that's right there. I like my expiration date lines to be yellow. So the point is, I really don't care what PayPal does. It could, as far as intraday goes, I mean, I guess I care a little bit, right? I mean, if it has a huge intraday sell-off, I'm going to be concerned about what it's doing. But You know, I don't care if it goes up, it goes down, and does all this crazy intraday stuff and chops around. I really don't care. And that's the thing about trading credit spreads is we're basically just picking out a level on the bigger time frame, and we're placing a bet saying that the underlying stock price is going to stay. If it's a put credit spread, then we want the underlying stock price to stay above our spread. And that's if you're opening up the credit spread out of the money, which is usually what I do. And this is a neutral to, even though I'm using puts to as the contract to trade, I'm technically short the put, which means that's you're bullish technically. All right. So basically we're opening up a spread, and the thesis is I want PayPal to stay above this white line, 66.76 per share. And I just got to take it to this yellow line, and this is going to be a winning trade. That's as easy as I can explain how to trade out of the money credit spreads. If you're bearish on a stock, okay, and you want to play the downside, well, then you're going to use the call side. And yes, some people are like, well, if you're bearish, why are you using calls? I thought that was bullish. Well, no, because technically we're short the call. Anytime you're short, you're doing the opposite, all right? So if I'm short the call, I'm bearish. The good thing with credit spreads, though, is it's neutral to like this put credit spread. I'm neutral to bullish, so I don't need PayPal to go up. It could just trade sideways, and as long as it stays above my white line, this is going to be a winning spread trade. Same thing on the downside. If I'm trading a call credit spread, technically I'm short the call. We just need PayPal to stay below my spread. If I put the spread above the price if I was bearish, or but neutral to bearish, because PayPal could still just trade sideways. You could even have a spread on both sides of the price, and then you just kind of converted it to an iron condor, didn't you? And that basically means you'll get double the income, and as long as the underlying stock price stays in the middle of your two spreads, you're going to be pumping out double income on these trades. So just a quick little lesson on credit spreads, if you will. But I teach all of this in the Discord, okay? So if you're looking for a new home, or maybe you're just been interested in trading more advanced options, I guess they're multi-leg, that kind of thing, definitely come check us out. There's links in the description. You can even join for free, see how you like it. That's really all the time I got for today. It's been about an hour. Just so everyone knows, there's about 700 people viewing the stream right now. Just so everyone knows, I do these streams every Tuesday, Wednesday, Thursday, usually from 4 to 5, sometimes 4 to 4:45. So this isn't the last time you're going to see me. I've been doing these for a while now. Every Tuesday, Wednesday, Thursday at 4 p.m. Eastern, I will come on here and stream with everyone, show you some of my open positions, show you some of my strategies, the ways I like trading. Again, a lot of my trades I'm writing contracts. A lot of them are sell to open. That's just the way I prefer to trade. That has been my most consistent and profitable strategy over the years by far. And I just don't have time to deal with stress and emotion and stuff like that. So I'd rather be on the contract writing side. And I love it. But anyways, my name's the Swinging Bull. The Discord name is PB Alerts. And if you do join the Discord, tag me in the chat. I'll come by and say hello. We can chat for a little bit. Maybe there's something I can help you out with right away. You know, who knows? We don't know. But other than that, I hope everyone has been enjoying these streams and enjoying the content. I do have a $2,500 account challenge going on right now. I started it about 3 weeks ago. It's going fantastic. If you want updates and progress on how that account challenge is going, follow me on X. My handle is swingingbull_1. I got a link for that in the description of the stream as well. You can just click on that. Follow me on X. You'll get all the updates and progress on that account challenge. But yeah, other than that, that's all I got for today. It's Wednesday. We got 2 more trading days left. I will be back tomorrow for another earnings stream. Of course, all my streams are free. I don't charge nothing for none of this. I just like coming on here, hanging out, chatting with everybody while I got some time after the regular session ends. And I enjoy it. I enjoy hanging out with everyone. But yeah, my name is the Swinging Bull with PB Alerts. I hope everyone enjoys the rest of their night, and I'll definitely see everyone in the very next stream. Cheers.